There are easy ways to look after your money. Introducing M-Kesho, the account on your phone. Open yours today at any Equity Bank branch or selected M-Pesa agents countrywide. M-Kesho from M-Pesa and Equity Bank.
Today's story takes us back to one of the most ambitious financial innovations in Kenya that promised to revolutionize banking but never fully took off. However, the pioneering concept laid the groundwork for products that have now become household names, such as Safaricom's M-Shwari, KCB M-Pesa, Fuliza, and Equity Bank's Equitel. At the heart of this story are two of Kenya's most iconic CEOs, Michael Joseph of Safaricom and James Mwangi of Equity Bank. These two corporate titans built companies that are today juggernauts, not only contributing significantly to Kenya's economy, but also employing millions and embedding their brands into Kenya's cultural fabric. In 2010, these two giants joined forces in what seemed like a match made in financial heaven to create M-Kesho, the first mobile banking solution of its kind. It promised to allow users to access banking services without a physical bank account, straight from their phones. No more waiting in the banking halls. Banking was about to be simplified. Yet, despite this groundbreaking innovation, M-Kesho failed to thrive. Not just once, but twice. Today, we take you behind the scenes of the corporate intrigues and rivalries between Safaricom and Equity Bank that ultimately led to the downfall of this particular promising venture, M-Kesho. Welcome to the Business Graveyard, where we tell stories of brands and businesses that have gone under or are struggling in order to gain insights and lessons so that history may not repeat itself in your entrepreneurship undertaking. Subscribe to our channel, hit the notification button so that you can be updated on our future videos. Also, don't forget to share your views and feedback through liking and commenting on this video. Before diving deeper into today's episode, let me tell you about two books that can help you glean invaluable business lessons: Business Conquest and Food for Thought, both of which are available at Textbook Center and Nuria online stores. Business Conquest, with a foreword by the late Chris Kirubi, walks you through navigating the entrepreneurial journey with inspiring stories and business insights. Whether you're running a startup, thinking of launching a side hustle, or managing a mature business, this book is for you. On the other hand, Food for Thought is your daily companion for reflection, filled with thoughts that inspire and trigger you towards success in life and business. For a signed copy, feel free to reach out to me via my WhatsApp 0720-977-569 or visit any Textbook Center branch or Nuria bookstore for worldwide shipping. The seeds of M-Kesho were sown long before 2010. By the late 90s, both Equity Bank and Safaricom were still fledgling entities, yet their CEOs were already navigating their companies towards dominance in their respective sectors. James Mwangi took over Equity Building Society in 1993, transforming a struggling institution into a powerhouse. By early 2000s, Equity had over 100,000 customers, mainly targeting the unbanked, people who had been sidelined by traditional banks that only cater to high net worth individuals. With its unique approach of removing entry barriers, Equity grew exponentially, attracting those who had previously stashed money under mattresses. On the other side, Michael Joseph had been seconded by Vodafone to lead a small startup named Safaricom. This was a telco operating from a two-bedroom apartment at Norfolk, trying to compete with more established international players with the likes of Kcell already in the market. Joseph steered Safaricom towards the ordinary Kenyan, removing bureaucratic barriers like upfront SIM card payments and monthly bills, which made mobile services accessible to millions. By 2007, Safaricom had more than 7 million subscribers and generated over 12 billion in net income. Then came M-Pesa, Safaricom's game changer in 2007, which revolutionized money transfers. With M-Pesa, people could send money across the country in seconds, eliminating the need for traditional bank transactions. Further to that, M-Pesa moved more money than all banks and had become a threat to the banking industry. Banks, attuned with the threat, they realized the only way to contain M-Pesa was through partnering with them, as was done earlier with the likes of Family Bank, NIC, and KCB, to enable their clients access their bank ATMs. The earlier partnerships were on enabling M-Pesa clients to be able to transfer money back and forth from their M-Pesa wallet to their bank accounts and vice versa.
That no one ever thought that mobile money transfer then would be a success. So definitely banks were not very happy to see us. because they felt that we were going into their region. And then definitely the fact that also there was no per se technical body or regulatory body that would see us launching mobile money transfer became also quite a difficult chance for us. And therefore, one of our greatest challenges then was to convince banks that we were not coming into their turf. And then remember, we were targeting the majority who were extremely unbanked. So we had a niche market that we were targeting, but the banks felt that we were entering an area that belonged to them. Well, as time has moved by, the banks now are working very well with us. And reason being is that we're not competitors at this point in time, but you're an add-on business to their current business. And that's why you can see with things, launches like M-Kesho and ATMs, is that now going forward, the banks are the best people you're working with right now. And also because our money is not held, or the M-Pesa money is not held within our offices, it must be banked, otherwise customers will never trust you. So going forward, it has been quite a good race, a good challenge. And I think the future for mobile money transfer is with banks, as far as I'm concerned. Initially, when we launched M-Pesa, we had Commercial Bank of Africa, who was the holding bank in terms of our money. But as our agent network grew, we realized that we needed to have something called super agents. This is whereby now agents can go to different banks and get what you call the e-float. And so we spread our wings to additional banks like the Cooperative Bank, Equity Bank. And then over and above that, we realized that over and above the fact that we have agents, customers needed the money 24/7. So what was the best way for them to access their money? And that's when we launched partnership with Equity. That was early this year on the ATM withdrawal, which is now one of our key contributors in terms of revenue.
By 2010, M-Pesa had gained significant traction, with millions using M-Pesa, and the logical progression was to merge Safaricom's powerful distribution network with banking services. Equity Bank, which had positioned itself as the bank for the ordinary Kenyan, seemed like the perfect partner, and so M-Kesho was born.
There are easy ways to look after your money. Introducing M-Kesho, the account on your phone. Open yours today at any Equity Bank branch or selected M-Pesa agents countrywide. M-Kesho from M-Pesa and Equity Bank.
The launch of the M-Kesho mobile savings account is built to be the next mass movement technological innovation to hit the Kenyan market after Safaricom pioneered the M-Pesa money transfer service in 2007. The innovation, which marks a further step in the convergence of mobile phone technology and conventional banking, will provide a one-stop shop for credit, savings and insurance services with the touch of a button. And although some are still not aware, questions are already being asked over the workings of the system and the safety of subscriber funds.
Customers will be putting ceilings on how much they would like to be available per day, depending on the activity level.
The minimum balance for the account will be 100 shillings, making one eligible to earn interest. Consumers will also be eligible for a loan ranging from 100 shillings to 5,000 shillings, depending on the credit history on either M-Pesa or Equity Bank accounts.
Ile kasi ya siku hizi kupanga 5,000 kama haiwezi tosa 5,000.
So ukiwazia na kidogo utaweka biashara yako uone vile umekupeleka tena uapply ingine.
With the private sector having introduced low-cost banking services for the common mwananchi, the question is, what more can the government do to encourage a savings culture?
To consider people earning interest on up to 20,000 shillings in their savings account, whether they can get a waiver on withholding tax.
Henry Gedaiga, Citizen Business.
M-Kesho was meant to be the first mobile banking solution in Kenya, allowing anyone to access banking products such as loans, savings and even insurance without ever setting a foot in the bank. Through M-Kesho, one could transfer funds, access microloans and withdraw cash from ATMs. It was a revolutionary idea, especially at a time when most banks hadn't even launched their digital banking platforms. When M-Kesho idea came to be in 2010, Equity had over 5 million customers, accounting over 50% of all banks in Kenya at the time. M-Pesa, on the other hand, had grown to over 12 million customers and was responsible for over 2 billion in daily transactions. M-Pesa had over 17,000 agents across the country at the time, and Equity had around 550 ATMs around the country. At this time, in 2010, agency banking wasn't available, and banks, seeing the threat that Safaricom was, had started lobbying the authority, that's the Central Bank of Kenya, to allow them to roll out agency banking. Probably, if you're not a Kenyan, you're wondering, what is agency banking? Agency banking means the democratization of banks, in that they will have agents instead of branches to enable their clientele still transact via mobile instead of queuing at the banking hall. At the time, James Mwangi was even quoted that will be the best way for banks to expand, through agencies and telcos. Equity had earlier tried launching their mobile banking in 2003 before Safaricom, but this didn't quite materialize.
We now control over 50% of all bank accounts in Kenya. We're the most capitalized bank in Kenya. And hopefully by the end of this year, we'll be the most profitable bank in Kenya. And that's been very much due to our focus on the bottom of the pyramid and offering financial services to people who had been previously excluded. Equity, in 2003, we tried rolling out a mobile banking service, very much like the M-Pesa model now. I'm sorry nobody from Fundamo is here, because we approached Fundamo in 2003, and we were going to roll out a cash in and cash out service through our customers. Maybe we were a bit before our time, but Safaricom came along in 2007 and started doing it. So we've been very mobile focused and believe fully that the future of financial services in Africa is based on the mobile phone.
Agency presented the future for banks, but how will the banks compete with Safaricom, who already had an established network and exclusive contracts with its agents, and by law they were not allowed to develop their exclusive agents? These limitations will trigger Equity and Safaricom exploring M-Kesho. Both companies were poised for success. The partnership seemed unstoppable, but was it? The negotiations for M-Kesho were led by the two CEOs, Michael Joseph and James Mwangi, both of whom are hands-on by nature. However, behind the scenes, tensions simmered. Both Safaricom and Equity were hungry for dominance, and negotiations on commercial terms for M-Kesho proved to be contentious. Equity believed they should collect transaction fees as the bank providing the service, while Safaricom argued that their vast distribution network gave them an upper hand. After a series of meetings, a revenue-sharing model was finally agreed upon, but the partnership was shaky from the start. It was also revealed that the partnership was exclusive for only 12 months, after which they will give leeway to explore partnerships with other partners.
The relationship with Safaricom is a complex relationship because we partners, but believe you me, we're competitors as well. We're competing in very similar spaces. So I think there were two giants in the market in the same space, and the two CEOs felt very strongly that it was better to compete, to partner rather than compete. It's been a very difficult relationship at the lower level because I think, dealing with Basheke, we see the areas at a lower level where we're actually competing on a day-to-day basis and are bumping heads on a day-to-day basis. For example, agents. The legislation in Kenya has just changed so that banks can now roll out agents. We will be rolling out a competing agent network. So in the field, we're actually competing head-on. But the two CEOs realized that we needed to partner, and so it was basically through the vision of Michael Joseph and James Mwangi that this came into effect, the deal, and so we had the integration functionality where you could send money from M-Pesa to bank and bank to M-Pesa, but we felt that wasn't good enough, that we actually needed to have something more concrete with Safaricom than just integrating. They are competing, there is that competition element, so we really felt we just weren't going to integrate without getting a little bit more out of the deal. And so I think because maybe we had a little bit more muscle than the others, we managed to negotiate. And then once again, costs of integration and stuff, we insisted on an exclusivity. So we've got a 12 months exclusivity. So it has been difficult. The reaction from the other banks, they're not happy. but we felt it was a commercial transaction and we would get the most we could out of the deal.
In the first few months, M-Kesho saw a surge in subscribers. 650,000 people signed up, but most of them were already Equity customers who used the platform to transfer money between their bank accounts and M-Pesa wallets. The double transaction fees and underlying tensions between the companies made it difficult for the partnership to thrive. Equity Bank, meanwhile, was building its own agency network, further escalating the rivalry. As both sides jockeyed for commercial advantage, M-Kesho faltered. When the exclusive partnership period lapsed, the product essentially collapsed. Adding fuel to the fire was a lawsuit in 2010 when Hoswell Mbogo Njuguna sued Equity Bank, claiming the M-Kesho idea had been stolen from him. While the case was dismissed, it added further strain to the venture. After the natural collapse of M-Kesho partnership, both Safaricom and Equity went their ways to build other solutions to meet the intended objective of M-Kesho. Safaricom got into a partnership with NCBA to set up M-Shwari in 2012 that will enable its subscribers save and interest as well as borrow through the M-Shwari account. This was an instant success and has grown in leaps and bounds over the years. As of 2023, its loan book was 42 billion Kenya shillings. That was not it. Safaricom went forth to set up a partnership with KCB in 2015. KCB M-Pesa. KCB M-Pesa will enable M-Pesa clients get loans with their mobile phone with flexible paying terms of up to 6 months and interest as low as 2% per month. KCB M-Pesa was a success and their loan books as of 2023 was at 83.7 billion. Safaricom was still not done with their inroads in offering mobile banking solutions. In 2019, they launched Fuliza, which is an overdraft facility. As of 2023, they had loaned out 578 billion.
Fuliza is never stopping. Fuliza. It's knowing someone has your back. It's kusonga mbele no matter what. Fuliza. Just dial *234#. So you never have to let insufficient M-Pesa balance limit you.
Equity Bank, on the other hand, started their push to get into the telco business. Through its subsidiary, FinServ Africa, they were amongst the first players to get the mobile virtual network operating license, which had them launch Equitel. Equitel was launched to ride on their existing customer base of Equity Bank and deepen its bank's offering to its clientele, now that M-Kesho had collapsed. During its launch, James Mwangi described Equitel offerings as giving the bank to the customer's hand. In 2019, M-Kesho out of the blue revived, this time under the leadership of Bob Collymore, as Michael Joseph at this time had stepped down as the CEO and was the board chairman of Safaricom. James Mwangi was still at the helm of Equity Bank. Both CEOs admitted that they had learned from the past mistake, but despite a renewed push, M-Kesho's second life was short-lived.
So Equity Bank and Safaricom have announced plans to revamp M-Kesho, the integrated service between the two companies that was launched in 2010 but failed to take off. Speaking during the event, Safaricom CEO Bob Collymore stated that there were challenges previously when the product was launched and they have moved to address them. M-Kesho was launched as a platform that linked Equity Bank customers who were also Safaricom users to access financial services between the two companies seamlessly. The two companies further say their newfound love will build more financial products, simplify cash delivery between their agents, and share technical knowledge to approach to risks such as fraud and cybersecurity.
The product actually still has about, I think, 20,000 customers with no advertising and no marketing. So that's the first thing. But the second to remember, Duncan, is that this is the beginning of a journey. And as James says, we will allow Kenyans to decide what it is they want these two companies to deliver.
I think that time we were young and not very experienced. We are now more experienced and hopefully wiser. And we have been put together for the last 6 years by trust of Kenyans to lead, shape the aspiration of the Kenya they want. And we have realized that we can provide the leadership
to the private sector to play its rightful role.
Bob Collymore stepped down from Safaricom shortly after the signing of the renewed deal due to health reasons. Unfortunately, Bob passed away soon after. M-Kesho therefore quietly faded away once more as Michael Joseph held fort temporarily as the CEO of Safaricom as they searched for Bob's replacement. M-Kesho went into oblivion, and this time, likely for good. So what lessons can we learn from M-Kesho's failure? 1. The right partner is crucial. M-Kesho's failure underscores the importance of choosing the right partner. Safaricom and Equity had overlapping customer bases but conflicting business objectives, which eventually led to the product downfall. For future innovators, finding the right partner who aligns with your goal is essential for long-term success. 2. Timing is everything. M-Kesho was ahead of its time. This concept of mobile banking didn't resonate fully with customers in 2010 as the market wasn't ready for such a disruptive idea. Timing matters as much as innovation in ensuring that a product or a service thrives. 3. Simplify the user experience. One of M-Kesho's key downfall was its double transaction fees, which frustrated users. Simplifying the customer journey and avoiding unnecessary complications can make the difference between a product's success and failure. 4. Innovation without commercial harmony fails. While the technology behind M-Kesho was solid, the commercial rivalry between Safaricom and Equity doomed the partnership. Collaboration in innovation must be accompanied by clear, mutual beneficial agreements. 5. Learn from failures and move fast. Safaricom bounced back from M-Kesho's failure with M-Shwari, learning from the experience. M-Shwari was launched with NCBA, a more complementary partner, and added credit facilities to encourage savings. Quick iterations and learning from failures were key to their later success. While M-Kesho never achieved its potential, it remains a critical chapter in Kenya's fintech evolution, marking the starting point for innovation that have shaped the financial landscape. Its legacy lies in the lessons it offers to innovators, entrepreneurs, and the corporate world at large. Thank you so much for having watched the Business Graveyard. Kindly subscribe to the channel and keep your tabs on the weekly and soon to be released content.